Deal Surgeons, Elite Masterminds. What's going on? This is Diamond Life. I don't know what's going on with the YouTube, but I'm using a different device now. But when I upload, I'm uploading in 1080p, 720p. But then when it uploads in 480p. And some people was like, damn, they can't even really see. So I got to see how to fix that. But I'm just going to just go over what I went over on my other device. Okay, this device here, the quality should upload better. Okay, but we'll see. So again, like I was saying, I'm predicting where price is going for US 30 using the shadow trading method. Okay, so again, these are Fibonacci's right here. Okay, this is a wick Fibonacci, this white line right here, and then I have a 1 hour body Fibonacci right here. Okay, meaning that I put it on the highest up close candle and the lowest down close candle on a 1 hour chart. That's what that orange line is right there. And then I use a wick Fibonacci and then a body Fibonacci. This is the wick Fibonacci, meaning I put it on the wicks. A lot of people use bodies on the Fibonacci's, and sometimes people use the wicks. Okay, so what I'm saying is you can create what they call a Fibonacci cluster if you don't understand the structure yet, or if you want to verify where you want to get out at. So basically I put these two Fibonacci's on here, and when I go up here and I take a look at where both of these Fibonacci's extensions are, you have a cluster. Okay, so it's a cluster right here. Let me show you. It's a cluster up here, okay, based on Fibonacci. So this, you can use this if you don't know where to get out at. Okay, so I'm not using it because I don't know where to get out at. I just like using it for confirmation. I'm always running experiments with this trading stuff. So as you can see, this is the body's Fibonacci, negative 0.75, and this is the wick Fibonacci, 0.5, negative 0.50. Okay, so as you can see, both of these lines are very close to each other. These are two different Fibonacci's. Okay, this is the 1 hour chart when I put it on the highest up close body and the lowest down close body, and then this is the actual wick, the highest wick and the lowest wick of the current swing, because that's what you put the Fibonacci on the current swing. So we see a confluence right here. So this would be interesting to see where price stops at. So I'm going to keep this on here. I'm just going over everything I did in the first video where it uploaded, and I shot it on 1080p. Worst case scenario, it usually upload in 720p, but the shit uploaded in 480p. I'm like, damn. So I'm just reshooting this video. Try to go over the main points. Okay, so I was talking about that. And let me explain the shadows. See if I can find the shadows. This is a smaller screen that I'm on now, but the quality should come out. It should come out in better quality. Okay, so I'm long US 30. This is predicting price before it happens. Now, as you can see right here, I think you can see this better on this screen here. This is NQ right here, and this is ES. Okay, ES is a S&P 500 futures contract. All this simply means is that they move similar. See that turquoise line right there? So what I'm trying to show you, this is NQ. This is the futures contract for NAS 100. So what I'm trying to tell you is that these all went higher. Don't you see that? Don't you see the wick right here? This is a shadow. Okay, if I click on this right here, this NQ right here, what just happened? This NQ right here is a shadow as well. Okay, so it came all the way up here, I believe. So this is confirmation that price is going higher. All right. So these are the shadows that I put on here. This is shadow trading. Also, if I go to the left, I have a few more shadows. This is the same stuff I talked about in the first video. I'm just kind of shooting another video to get more, for the clarity to be a little clearer. Okay. Let's see. I think I had another shadow for YM, which is the US 30 contract, futures contract. The futures contract, basically, you can use it to create confluence because they all move similar, even though the candles move differently on the futures contract, but it still end up going to the same place as the spot, which is US 30. And that's kind of confusing to new people, but okay, so this is YM right here. This is the futures contract for US 30. As you can see, this chart is US 30. But this is the futures contract. As you can see, it went all the way up. Okay, so this is confirmation, and we got ES right here. It went all the way up here. So what I'm trying to tell you is that I got confirmation that price is going higher based off of the future contracts and pairs that move similar to US 30, which is NAS 100 and S&P 500. Okay, that's why I put Fibonacci's on here, these bullish Fibonacci's on here to help me with my bias. Okay, now also I have, let me see, I'm trying to just kind of go over the main points in that first video. I have a 4-hour bullish order block on here. Okay, so that's what that green line is right there. Let me show you what I'm talking about. Hold on. Okay, so I'm on a 5-minute chart, but on a 4-hour chart, I have a bullish order block on here. Okay, and so what I did in the first video is, this is the bullish order block. This is the opening price, this green line right here. So when I went to the 4-hour chart, I saw that it lined up with the 2-hour chart. That's why I put on here bullish, where you see plus OB and 2H, it says 4H and 2H. So both of these lined up. So I like to label it like that. And also in that first video, I put the mean threshold on here, which is 50% of the body, okay, of the bullish order block. I'm not going to go to the 4-hour chart, because if you watch the first video, then you kind of know what I'm talking about. But basically, the mean threshold is important because it's showing you what price action is going to do. Like for instance, in that first video, if you remember, I'm just shooting this video because it's probably going to come over clear, trying to add more value to the channel, the YouTube channel. But this is a bullish, I have an alert right here as well. So it's kind of covering up the mean threshold, that white dotted line. But this is, you see how that candle right here closed below mean threshold right here, that gray candle. So if you understand how the structure works, if it closes below mean threshold on a higher time frame bullish order block, then it's going to retrace up only to go lower. That's why it's going to retrace up only to go lower, and that's why it went back down. See, if I would have saw this right here, and I saw it going up, I would have been like, okay, well, it's not going to reverse, but price is going to probably take out this high and eventually come back down. It has to, because it closed below mean threshold on a 5-minute chart. You see that line right there? But you have to understand how the structure works. So like I was saying, I'm just not going to be a long video. But these lines right here, these blue lines, I was basically predicting price. So I said that I would use a lot, which is 1.0, 100,000 units. So I said I was going to split it up into multiple positions, okay? Because you don't want to just get in on a lot right here and then be in drawdown. Okay, so what I said was, what I predicted what would happen is, if you understand ICT's theories, that we have equal lows right here, okay? So I'm thinking that price is here, so it may actually, so I'm actually going to get in on a 0.25. Now I'm using a lot. That's 4 0.25s, okay? So I'm splitting up my risk. So I said I would get in right here. The reason I'm getting in right here on the open is because price may actually just take off, and I don't want it to leave without me. But if it goes down, I'm okay with being in drawdown, and I'll explain why. Now, we have equal lows down here, like I was trying to explain in the first video. So price could come down here from the open, take out these lows, wick through mean threshold. I don't want to see it close below here. If it does, then I have to reevaluate, but it could wick below these equal lows only to go higher up here to my targets, and I'll explain what that is. So down here, I said, okay, if it comes down here, then I'm going to put a buy limit down here for 0.50, which is, so basically, if price comes down here, I'll be in at 0.75% of one lot. So I'll be at 75% of a lot. So that means I have 25% left, right? So that's what this is up here. This is a buy. I have a buy limit up here, because if I'm wrong, if price don't even come down here at all, I still want to catch this. So price will come up here, and then it would catch me in for a buy limit. And I only be in at I only be in at half a lot, which is 25 and 25. So my target would be, my targets was, let me explain this, and then I'm going to end the video. It's not going to be a long video. Okay, so based off my glitch in the matrix trading system, that I came up with. That's what those purple lines is. Let me explain the purple lines. Hold on. Where my purple lines at? It's hard for me to see the screen. Okay, so based on the glitch in the matrix trading system I came up with, which I can't, oh, it is right there. So I have confirmation that price has to come up to here based on the glitch in the matrix trading system that I recently discovered that I'm not going to talk about. Like I said before, it's similar to shadow trading, but it's probably about 5 to 10 times stronger. So it really has to come up here if you really understood it, but I'm not going to talk about the glitch in the matrix system. But price has to come up here. But what I was saying in the first video is that my target would be this QP. I was talking about how the orders are at the 500s, the 750s, the 250s, and the 00 big figure. So right here, you can't see it on the chart because I have this thing over here that I'm not going to move it, but this is 37,500. This is a QP. So I was saying that I was going to get out at a micro QP. The micro QPs is the 20s, the 50s, and the 80s. So basically, I would be in at a half a lot here or a whole lot, and I would take off 50% of my target here, and then I would take off another 50% here, which I'll be at 75%, and then I would take off everything here, even though my target, I would be holding for this line right here, which is 50% of a standard deviation, okay? But I always get out before the target. That's the way I was trained by ICT. So I'm going to get out at a micro QP before my target. Okay. So price, the micro QPs is the 80s, the 50s, and the 20s. So that's why I have micro QP right here, 80. So I would get out at all my position here, and then I would hold a runner. I was saying I was going to hold on a 25% runner, meaning that I still see price going higher, but I don't want to hold all that risk. Okay. Because I definitely see price going a lot higher. But this is just a scalp right here. Because remember, prices, I would have gotten in all the way down here. So, you know, I would sell 50% of my position here, 75% of it here, all of it here. And then I'm going to leave a runner on to just kind of 25% runner and just, you know, have that bad boy running. Okay. And I'll put my stop loss in profit, meaning I'll find out wherever the 38.2% is on a Fibonacci. And then basically what I'm trying to say is that before price retraces on me and goes all the way down here, because remember, I'm leaving a runner on. That runner, I'm putting on that runner somewhere down here at 25%. So before it comes back down here, I'm going to automatically get out before I get in drawdown. So it's something people call putting your stop loss in profit at the 38.2%, because on a Fibonacci, usually it retraces off of that. Okay, so yeah, that's kind of what it is. I kind of explained this. It's not going to be a long video. You can watch the first video in low quality. I just was trying to explain what I was talking about in that first video. I was mad that it uploaded in such poor quality when I actually recorded it on 1080p, but sometimes YouTube uploaded in 720p, but that other video uploaded in 480p. I was like, what the fuck? So I wanted to just kind of explain this in higher quality. I know this video right here won't upload in 480p. It'll be a higher quality. It'll be a higher quality upload. Okay. So this is basically me predicting price before it happens. Like I said, I had a guy on the channel say that, you know, if this stuff works so well, you should be able to predict price before it happens. And I was like, this person obviously don't know who the fuck they talking to, you know. I guess he probably thought I was one of these people who playing around with this shit, you know, one of these plan B type of people. So I just explained the Fibonacci, and I explained where my targets is. Oh yeah, my stop loss. I'll explain this and then I'll end the video. Let me go to the 4-hour chart and then I'll explain the stop loss and then I'll end the video. Okay, so if you understand ICT's teachings, we put the stop loss below the bullish order block, okay? So it's the last down close candle here. Okay, so this is the higher time frame, okay? So like I said, this is the Fibonacci right here. I have it on the wicks. This is the low wick and this is the high wick, okay? So I'm going to put the stop loss. Usually you would put the stop loss below here, or consequent encroachment, which is 50% of this wick. But what I was saying in the first video is that I'm not going to use a stop loss. I'm going to put an alert down here, 50% at this. I'm going to put an alert at this bullish order block mean threshold. Because on a 5-minute chart, if I see price close below this line right here, then it's no need for me to use a stop loss, because if it closes below that line, that means that I'm wrong, which is okay. I'm still going to make money, because what's going to happen is price going to reverse up temporarily. And then remember, I got in, price triggered me in on a half a lot right here. So if price closes below mean threshold, it's going to retrace up temporarily only to go lower. And that means that I'm wrong, but guess what? I would have made money, or I wouldn't have been in that much drawdown, because I managed my risk. So if this alert gets hit, I'm going to look at the chart and see where price closes at mean threshold on the 5-minute chart. Okay, mean threshold is 50% of this this gray candle here. And if it closes below, then it's going to retrace up, and then I'm going to get out once either I'm going to break even or have a little bit of drawdown, and then it's going to go lower, and then I have to reevaluate what I'm going to do because I was wrong. But if you understand the structure, you still can make money even if you're wrong. So I'm about to go ahead and end the video. Thanks for watching. We'll see. I'll do an after video to see what price did, to see if I was right or wrong. Thanks for watching.